more for this time. We are looking together with this activity. We are looking together to this activity. So we'll do question number 4, which is uploaded on LAN. So it's a past test. This test, it was, you can go through this test because it will assist you so that you'll be ready to write on this day. So this is the test for 2022. It was test number 1. There is multiple choice. You can do that. There is another question where you use definition number question 2. Use a name for external users. That information is there. Also, make sure you do a question number 3.1, where it's required to do your accounting equation. So make sure that you go through that activity using that example to answer the question. So you need to go for that. Also do your general journal, so important. But I'll say instead of transaction number 4, 5, 6, 7, and 8, just do all transactions because you are doing more activities. So narrations are not required. If you remember that short story, a summary. So it's not required. But what is important, you need to do on the general journal. Also do question number 4. Question 4, this is what we are doing. You are provided with information of Sobantu traders. The information given, there is an opening balances on the 1st of October 2017. There is debtors control account. In other words, the correct word, it should be trade receivable account. I'll explain that. This is an amount given, creditors control, which is trade payables. This is the balance given at the beginning. So if you remember the journals, I said you prepared the journals or books of first entry. You do that every month. There are plus or minus 8 journals. There are plus or minus 8 journals. Another journal that they drawn up in this activity, they sales on credit. There are petty cash payments. There is from the cash receipts and cash payments journals. So purchases on account, that is another journal. Inventory returned, that is another journal. The last one, interest, as well as bad debts written off. I'll explain those concepts when we get there. And then what is required here, we need to prepare trade receivables account, or they call it debtors control account. Those who did the accounting before, they know this concept, debtors control account. So we use trade receivable account. So please make sure that you do have this activity, because now and again we'll go back. What we need to do here, we have to draw up only one account in the ledger. So this is the one account in the ledger, which is your trade receivable account in the general ledger. So in the test last year, it was 11 marks, but this year it's 15 marks to do this T account. So we'll use this information given to draw up the trade receivable account in the ledger. All right, make sure that you do have this. You open up in your online, and then you do your T account in the ledger, and then you close off the books. So that is what we'll do, but we'll use this information. Let me share also my T account. That is my general ledger. This is my T account. So let me share the T account in the ledger. This is my trade receivable account in the ledger. So there is, as you know, that this is a T account. Debit side, entries on the debit side, credit side, there are 2 sides. Date, when it was, this transaction took place, we need to put the date. If there is an opening balances, we need to start with the balance given at the beginning. We need to put the year, the date, the month, and the date details. What is that? Then we put amount. On the debit side, we need to do the same entries as well on the credit side. As you know that when you draw up your T account, your ledger account is in T form. There is date, details. I don't have folio number, Please don't worry about that. It's not part of your any assessment when it comes to folio, but I'm just giving you the information which is so important. So date details your amount, which is so important. And then I just explain here your trade receivable or debtors. Who are those? Those are the clients who buy on credit or on account. In other words, they owe the business. So when we are dealing with trade receivable, account, or debtors, we are dealing with your clients. But those clients, they purchase any item in your business on account or on credit. So they owe the business. So if they owe business, but let me also say this is an asset account. It's classified as an asset. This is an asset account. So this is an asset account. An asset account, it must be controlled. It's controlled or owned by business because it's an asset. And then you know that there is we need to create a policy when you are dealing with your clients who are not paying in cash, who are paying on credit, on account. So we need to make sure that, but it's so important that you know this. This is an asset account. So in other words, when you are dealing with the trade receivable account, in other words, you are dealing with an A account. Let me put here in my bracket. All right, this is my A. So A stands for an asset. This is an asset account. If you remember, all assets account, the balance is shown on the debit side because it increases on the debit side, it decreases on the credit side. That is what we know now about an asset. When you deal with debtors or trade receivable, we are dealing with an asset. So that one, it gives you an idea that when whatever you do, you are dealing with your asset. The balance given, whether at the beginning or balance brought down at the end, must be shown on the debit side because you are dealing with an asset account. Trade receivable, as I mentioned, to clients, those clients who buy on account, on credit, or in other words, they will pay late, they owe the business. It's an asset account controlled and owned by business. All right, let's get straight to our activity. And now we go to our activity. Please make sure that you open up your question number 4 from Len so that it'll be easier on your side. So you open up your Len T account, your Len question, which is question number 4. We are not dealing with trade payables. We are dealing with trade receivables. I have to show you first in class before you go for trade payables. But for now, we are dealing with only one account, trade receivable. All right, let's go straight to our activity. Then I'll go to my notes. I'll go to my notes. When you go to your activity, and then you'll find trade, your notes for trade receivable. So if you remember, let me show you once more. So you go straight to your trade receivable. So let me show this one once more. This is my question number 4. So this is what you do. Please make sure that we go to question number 4 once more so that we answer the questions. This is your information. We need this information as we are drawing up this T account in the ledger. So we need all this information. But here we'll be dealing with only information that affects our debtors, our clients who purchase on account, who owe the business. So we'll be dealing with that. So please make sure that you open up this T account from Len. Let me share as well my ledger account so that we'll be starting to do an activity together. All right, firstly, what you are giving here, it's the opening balances. If you remember, the balance is given. Let me check my balances given in my ledger account. So I'll go straight to my balances given. So my opening balance here is sitting at 77,028. In other words, it's 77,028 Rand. So those are balances on the 1st of October 2017. That is the information given. So my 1st October 2017, there's 77 and 28. Then I'll put my year 2017. If you remember, I put the month, it's the October. I put the date is the 1st. So here I'll write my balance. This balance is brought down. So right, this is my BD. And then you put amount. This is 77,028. So that is my 77 and 28. So let me put it this one. So that will be easy for our books. So this is how we record this entry. The first entry is recorded. Why we record 77,028 Rand on the debit side? Because we are dealing with an asset account. Asset account, there is a balance given. So if there is no opening balance, we don't worry. We just record the entries given. So in other words, transaction or journals, entries from journals, then we post to our ledger. So that is the first entry. Already our clients at the beginning of this month, which is the 1st of October 2017, they owe us, the total amount they owe us 77,028. That is the total amount they owe the business. All right, let's look at other information because we need to conclude. In other words, we need to draw up our
Hello,
ledger.
sir.
Let me allow Kwanele
Sir.
a hand which is up. Yes, Kwanele.
Hello. So,
I saw that there is someone with a hand up. Yeah.
But the balance at the beginning overdrafts or balance is on the credit side, because you said we must like always put that balance at the beginning on the debits because an asset. What if the asset is credited? We open it with a credited amount.
All right. Thank you so much. Now I get the question. So trade receivable, one is an asset account. So the balance always you'll find on the debit side. That is number one. So if we deal with overdraft, that means it's only the bank with overdraft. So if cash that we use in the business, not our own money, and then we use an overdraft. An overdraft, it's a liability account. Once we deal with a liability, the balance is shown on the credit side. But in this case, we are dealing with an asset. Trade receivable, that is an asset in the business. That is why the balance is shown on the debit side. Always you'll find the balance on the debit side. If you balance your books and then you carry it down, it's taking place on your debit side instead of your credit side of your account, and then that means there are entries that you miss to show in your trade receivable account. Always it will be shown on the debit side. I think I answered that question. That this is an asset. It's not similar to bank account where you'll have an overdraft. The bank has shown an overdraft if it's withdrawn. All right, thank you for that question. Let's move to the next transaction. We go back to our transaction question number 4. We recorded the opening balance of debtors control account or trade receivable account on the debit side. So let's leave out creditors control. We are not dealing with that. And then if you look at the next entry, there are sales on credit. What it tells you, if you remember, I mentioned number of times that you are selling on credit, we use cash or use credit. In this case, we sold stock on credit. Amount is 73,600. So in other words, our clients took stock for not for personal use, but they used our stock on credit. They took our stock. Those are sales. They'll pay us late because it's a credit sale, it's not a cash sale. So in that case, we need to charge our debtors. When you charge your debtors, you increase their debt because they owe the business. amount is 73,600. So this one, you put only the last day of October. October is the 30th or 31st. 31st of October. And then you put the contra account. These are sales. Amount is 73,600. Why we put sales on the debit side? Because they took on account, they increased their debts, because whatever is recorded on the debit side of this account, they owe the business. So they took on the 31st in sales credit, it was 73,600. They owe us this total amount, because this balance, it comes from the previous month, which was September, the last day of September. It's an opening balance on the first day of October. So 77,028, that is the balance they owe us from the previous month. But this month, they took a number of stock on account on credit, and we charge them. We need to charge our debtors. Their account must be increased. They owe us more, 73,600. Okay, let me move on. Then I'll take questions. But if there is a question, please let me know. You may raise your hand, then I'll allow you to ask the question. Then let's continue checking our additional information. Opening balances are recorded. Sales on credit in the current month is recorded 73,600. Then we move to petty cash payments. So when you use petty cash, so that one is available in the business, but we need to record the entries. You'll find that there is a refund to debtors. Amount is 320. We refund debtors out of petty cash. Amount is 320. We refund our debtors. So you can't charge your debtors if you refund them. So in other words, they pay more, and then you can't charge your debtors. You refund them. So when you refund, if you remember two accounts, your bank, in this case, is petty cash, is credited, because petty cash is an asset. So petty cash is credited, then we debit our debtors in this case, but we need to state a refund. Let me show you how to record this entry of 320. So you'll be shocked that this entry is recorded here. Then I'll write, this is my petty cash, but in bracket I have to state this is a refund. We refund our debtors using petty cash. Trade receivable is debited to petty cash. Petty cash is credited because it's an outflow of cash. We took out petty cash of 320 from the business and we refund. Others will be saying, why we record this entry on the debit side? Because if you record on the credit side, we are saying when you complete a double entry system, petty cash account will be debited to trade receivable. So in other words, it seems as if you still receive cash from your clients. But in this case, that is why I put the word refund. So in other words, you need to state this is a refund. This is how we record this entry. I'll explain more if there are also questions on this issue, why we record this entry on the debit side of this account as if we charge them, but they are getting the refund out of petty cash. Because if you complete your double entry system, and then you'll see petty cash will be credited by trade receivable. Amount is 320. Because in accounting, double entry system it works. That is the rule. All right, let's move out of petty cash. Let's check another additional information. There is cash from receipts journal, as well as there is cash that was paid out of cash payments journal. If you remember, we are no longer dealing with checks. We use EFT. But let's consider this information because it was prepared previously before we move out of checks. Sales for cash, that one, it won't affect debtors because those are sales for cash. If you check the other one, check payments, that is EFT, paying to creditors, it's not affecting our receivable. Then the third one, check payments, refund to debtors. That was we use EFT to refund our debtors. In this case, amount is 1,920. It's coming from as a refund. So in other words, they've paid more. We use an EFT, we refund them. Also, it will be recorded similar like the issue of petty cash, but in this case, it's coming from the payment side. So in this case, I'll put bank. It's coming from cash, but also we need to state this is a refund, and then the amount is 1,920. So this is another refund. We refunded the debtors, because in business you can have number of clients, number of debtors, but in this case we use petty cash 320. We use cash EFT. We are no longer dealing with checks. We use EFT. There is an outflow of cash of 1,920, but we need to state it's a refund, because if you put on the credit side, when you complete your double entry system, your bank account will be debited by trade receivable. So in other words, you are no longer refunding. In other words, it says the transaction is saying now you receive cash from your clients, but in this case it must be stated this is a refund. So you'll get marks if you state this is a refund. All right, let's look at more information from cash channels and cash receipts, or from cash channel, that is your CRJA and your CPJ. There is cash received from a debtor whose account had been written off. Amount is 390. All right, let me explain this one. When you write off a debtor, in other words, we allow debtors to buy on account. Not all debtors will pay the business. They will pay back the business. So others, they won't pay on time. So when you close our books, we need to state, we try to trace clients, maybe they move from this place to another place, hard to get them, and then we decide to write them off. When you write off your debtors, those who fail to pay up until your 12-month period, so you create an expense account, a new account, we call it bad debts. In this case, we write off this debt of 390. In the previous financial year, we write off. But in the current month of October that we are busy dealing with, in this current month, they pay the business. But this person, we won't consider him or her as a debtor anymore, but we call it bad debts recovered. So in other words, it's an income to business. So it's not affecting trade receivable account. It's no more a debtor. We write them off, but at least in the current month, they came back, and then we won't sell anymore on credit, because they pay their accounts is fine, but we don't trust these people, because they move from one place to another when you're looking at your the money that they owe you. All right, that one is bad debts recovered. It's not recorded in a trade receivable, but I'll explain more on this. Next transaction from cash receipts and cash payments. Debtors checks returned. Mark referred to draw. It's fine. Let me record this entry, although we are not dealing with checks anymore. But if a check that was received from a client, when you cash that check as a business, you'll find that the teller will say refer to drawer, because there are a number of reasons. Maybe there is no money in the check. Mostly there is no money. There are a few cases when there is an error. Amount in weights is not the same as the amount in figures, then it won't be the same. But if it's bad debts recovered, so if it's check written or returned, mark refer to drawer. So this check we were recording as bank, and then we refer to draw. Always this one we write it on the debit side, but we need to state the reason. What is the amount here? Refer to drawer. So amount is 600 rand. So we need to put that amount is 600 rand. So if it's referred to drawer, but anyway, we are not dealing with checks anymore. You won't find a check referred to drawer. We are not dealing with this anymore. So, but that is how we recorded this and refer to drawer, because there is no money. So automatically it affects the business. So the cash that was received in the month of September, 600 Rand, when you cash, when you deposit into bank account of a business, then the teller will say, no, don't deposit this one, refer to drawer. So in other words, you need to trace the one who sent the check so that they owe us, they still owe the business. So that's why trade receivable is increasing with this amount, because they still owe the business. Let's move to the next one, cash and checks received from data. So in other words, we receive cash. Those clients who are paying cash, who owe us maybe in the previous month, they are paying the accounts 102,940. That is 102,940, 102,940. At least on the credit side. On the credit side of your T account, the last day is the 31st. At least there is cash that we receive from clients. 102, amount is 102, the total amount is 102,940. This is 102,940. At least we receive cash. Let me put in bracket, this is your receipts, that cash that you receive from clients. They are paying the business. They are paying because they owe the business so much. And then in the current month, they issue out as EFT. We receive this amount of 102,940. So there is plus in the bank account of a business if you complete the double entry system. And then let's move to purchases on account. You won't find receivable, because it is dealing with those that if it's purchases account, that is how we record entries where the business purchase on account, there are purchases. We'll see when we draw up the creditors or the trade payable account. So that one is not part of your receivables. Next one, it's inventory returned. If you remember, we do have transactions where the data is not happy, or clients returns goods because they purchase certain goods, they are not happy, or they found it somewhere and then they return those items back to the business. So debtors allowances, we call it debtors allowances or sales returns. Debtors allowances is 4452 from our additional information is 4,452 Rand. So you can charge your debtors, but it will appear on the credit side. Let me write here my debtors allowances. Debtors allowances is 4,454. Let me confirm that it's 4,454 Rand. Yes, 4454. This is how we record your debtors allowances. Those are returns. Let me put in brackets so that when you deal with this, you know those are returns. Those are returns. It is 4452. So those are returns. They are not happy with certain item. We can't put on the debit side because we sold these items, and then you can't say I have to charge more from my debtors. But this one, you know, we won't say let me record this entry. So these are returns. These were sales. We issue an invoice here. Here we issue a credit note. There's a difference between invoice and credit note. Invoice, when they purchase on account, that is how we receive invoice. We owe that business. It's where you receive an invoice. But if it's a return, you receive a credit note. All right, let me move to the next one. Before I ask just a few questions, let me close off this account. Interest, charge to debtors. Anyway, it's saying charge to debtors. We charge interest. Why? They pay late. If they pay late in the business, we charge interest. How to record that entry? And then on the debit side, we need to write, this is the interest. Let me write, this is the interest charged to our clients for paying late. We charge them 1,000 Rand for the month of for the month of, we charge interest. So this is how, when you charge your clients, the entries must be shown on the debit side. If they are paying, or returns must be shown on the credit. That is how we deal with this. And then let's close and use and go to your last transaction. So which is bad debts written off. If you remember, there is bad debts recovered, but this one is written off in the month of October. Amount is 1,776. We write them off. We create an expense in the business. So when you write off, the entry is shown on the debit side. On the credit side of the account, 1,000. This is my 1,776. 1,776. This is how we record this entry. So my 1,776 here, if these debtors, they in the next month, which is November, they are coming back with this amount, we'll accept cash, because we are not treating them anymore as our debtors, because we write them off in the previous month. All right. So when you check the additional information, we concluded everything that was about trade receivable. So as I mentioned at the beginning, that the balance brought down always must be on the debit side, because you are dealing with an asset account. Quickly, all right, my balance carried down will be coming this side. This is my CD, and then a new balance on the 1st of the new month, which is November. All right, this is my 1st of November. There'll be a balance brought down. So what we need to do, we need to balance this account. If you remember, we need to balance this account. Always your debit side is more, it's an asset. So what you need to do, you add all entries on the debit side. In this case is 77,028. You add 73, 600, you add 320, you add 1920, your 600 rand, as well as your 1,000 rand. So your debit side is sitting at 154, 154, 468. This side is more. Take the same total amount on the other side, 154, 468. So then you less all entries on the debit side. On the credit side, this is my 102, 940, my 4454, and my 1776. So I'm sitting at 45,000. They owe the business 45,298. I think my figures are correct. Someone may confirm that. That is 45,298 rand. So this is my T account in the ledger, my complete ledger account, trade receivable account in the ledger. So this is how we balance the account in the ledger. Always remember, we are dealing with an asset. Always your balance should be on the debit side. As you see, at the beginning of the current month, they owe us 77,2028. At least we receive some cash, and then now they are owing the business 45,298. Always when we deal with debtors, they will owe you. There are those who won't pay. You try to trace them. They won't pay, then you write them off. In this case, we have written 1776. That is what we have written the current month. So this is how we show the T account in the ledger. Is there any question? We'll do another activity as well on Wednesday. And then on Thursday, we'll do the same. And then we'll prepare for the coming test on the 20th. Any question before we conclude? Because I just we'll just have a minute or so. Thank you. Any question? For Senzo?
Yes, sir.
Yes.
Oh, I don't think that there are no questions, sir. There are no questions.
Oh,
Everybody's
all right. Thank you so much for this session. So we'll do the same on Wednesday. Another activity I'll share with Senzo. and your class rep, then you'll have it. Then you do that. Please make sure that you go through your activity or your question, which is uploaded, as well as this past question paper. We go through your multiple choice, your accounting question, your general, you draw the general ledger, and then you'll make it. Thank you so much for joining this session. Thank you so much. I've noted those who are present as well. Noted those who are present in this session. We're sitting at 112. Thank you so much. Please keep safe. See you on Wednesday.